Let's go.
Welcome to the Business Happy Hour radio show with your host, Frank the Bank Cotto, the owner of Lincoln Lending Group right here in Tampa Bay for 23 years. Joined by his incredible co-host, Ksenia, realtor with Mahara and Associates, Tampa's top real estate company. Together, they have helped finance and close nearly $1 billion of real estate every year. If you're looking for local mortgage or real estate advice, the Business Happy Hour team has been right here on News Radio WFLA for over a decade. Listen right here or find us on the Business Happy Hour YouTube channel or follow us on Instagram at Frank the Bank Cotto. Now sit back, relax, and get ready for some serious mortgage, real estate, and business talk with two of Tampa's top experts. Here's Frank the Bank and Ksenia.
All right, Tampa Bay, are you ready? Are you ready for a big, exciting radio show? I am, and now Ksenia is, because we are live on Instagram. We are on 970 WFLA Sunday morning. Rise and shine, guys. It is summer. It is here. I don't know about you, but it is hot outside. Sen, what are you thinking? You're wearing a jacket today.
It is so hot. I know.
Ooh.
Well, because usually it's cold in here, so, I come prepared.
Yes.
But yes, no kidding. It is hot out there.
They're saying that today, and by the way, today's Tuesday, if you're listening on Sunday, in case it's freezing, probably not. They're saying it's going to feel like triple digits today.
What?
Triple digits.
Oh, man.
Dude, what are we going to do?
Go to the beach.
We go to the beach. That's it. It is the summer. It is here. Kids. Mike, if you're listening on Sunday, my kids are out of school. What about your kids? When do your kids get out of school?
They got one more week.
One more week, like next week. You got to go
week.
next week. Isn't that kind of screwed up? Like because they get Memorial Day
I'm sure the
off,
kids
right?
think so.
Yeah, dude, you got
I can't
Memorial
believe
Day?
school's almost over.
I mean, well, let me ask you this. Do you as a mom, do you sleep in more in the summer?
Well, I still got a little one that I think we're going to be sending him to
Or sending them off to somewhere like.
Yeah.
So,
But no, we figure out, camps and all that stuff.
Yeah, I kind of like I like the groove of getting up, taking the kids to school. I take one out of two. I'm a 50%, and I like it because it kind of gets my day started. I have meetings at 7:30 in the morning with people on the phone, which is weird. Hey, by the way, friends, starting next week, I'm not doing 7:30 in the morning meetings. I got 2 months that I'll do like 8:30 meetings, right? But I mean, sleep is super important, especially now you're a member of X-Force Body. Congratulations, Sen.
Thank you. Yeah, I was so sad I missed Illy, but,
Yes.
I love her advice, the 8.5 hours a night, which I do try to get. I love sleep.
Yeah.
So now that it's encouraged, hey guys, I need my 8.5 hours.
Right. Well, now you got like your trainer telling you this. So now you can go home and like look at the family and be like, sorry, I need my 8.5 hours per my trainer.
Yeah.
But so can you get your 8.5 hours?
Some days. It
Right.
really depends on the little one's schedule. You
Right.
know, if he wakes up in the middle of the night, which does still sometimes happen.
How old's the little one?
Well, I call him the little one because my oldest is 12.
Yeah.
He's almost 3.5.
Oh, that's pretty little actually. That's
Yeah.
yeah. Man, those were good years. You know what's funny? You know how you know when you figure out when those were good years? When they're gone. when the kids are 13 and 15 and they know everything, and they don't want to talk like it's like a thing. Like, am I going to get talked to today? Am I not going to get talked to today? I don't know. Landon, though, I'm going to give a shout out to my buddy Landon. He still talks to Dad. And we still convert, but then again, I do have to drive him to school, so maybe that's the only reason that I get that. I don't know.
I think you're cool dad. I think if you're a cool dad or cool mom, hopefully that still, sticks around. But I'm going to wait and see. I'm not excited for the teens to hit with my oldest because you just never know, especially with girls.
Yeah. Oh, my little Lily bear. Love you, Lily. I'm embarrassing her. Look at all my boys over at Jesuit talking. That's right. You boys, be good. Don't get in trouble at lunch. That's right, Ev. My buddy Everson Buscemi got a hat trick in the semifinal hockey game for Jesuit this year. I tried
congrats.
Yeah, congrats is right. It was 3 beautiful goals. I think one of the other guys got a hat trick as well. And then it was kind of fun. Jesuit played Jesuit. These guys, you see these comments. Jesuit played Jesuit in the finals on Sunday, and it was really cool. So guess who won? Jesuit, right? They have 2 teams. I got an A and a B. But this whole thing about sleep, you adolescent kids need to be getting 8 hours of sleep. I see what you guys are trying to do. You guys fooled me last week. But anyway, we have a lot of likes and shares here on our Instagram. That's what we're watching, our comments on here. But sleep is very important. right? And they actually say, you kids are going to like this. The trainer that was on last week said that you teenagers' circadian rhythms don't start until 11 p.m. You missed that last week. They say that's why these youngins, these teens, want to stay up so dang late, right? And it kills me because I want to go to bed, after them, not before them. But anyway, because you never know what they're going to do. Especially the ones on this thing right now. They're probably sneaking out and doing bad things. That's right. I'm going to call the dean guy over there at the school. But yeah, so they say they should do it. So really, their school should start later. It really should. Like scientifically, they should get their 8 hours starting like 11 or 12, and they should probably start like at 9 or 10, which would be great if we could all get our work weeks to start then.
Yeah.
Right? Would that be nice?
Sure.
I don't know. Then you got to tell the little one to not wake up in the middle of the night.
Oh, if only.
Yes, that's right. Little one, if you're not listening. Anyway, so big win this week for Jesuit. Good job on winning the spring finals in hockey. We are going to talk some real estate, so we'll probably bore you guys here in just a minute. But I tell you what, all you kids, you need to go back home tonight and be like, hey, Mom and Dad, you need to talk to Frank the bank. We need a nice new house. And Ksenia will find you the nice new house. All you have to do is call 813
755-REAL.
755-REAL. That's it, 755-REAL. Give Ksenia a call and tell her you heard about her on the radio. She'll find you a house, and I'll find you a mortgage. So on today's show, we talk a little fun in the beginning. Today's show, we are going to talk about equity lines versus refinancing. What's the difference? What's better for you? We're going to talk about the rates. Everybody's talking rates because last week the Fed met, and they didn't change rates. Right. Is that good? Is that bad? What's going to do? We're going to talk a little bit about reverse mortgages because, I love them. It's near and dear to me. We just did another one for somebody else. It worked out great. And then, Ksenia, we've got some stuff we got to chat about. You came in hot today, and you're like, man, Frank, there's a difference between good and bad lenders. And to hear a real estate agent say that, there's got to be a story behind this. Mm-hmm. So now she's like, we're not going to say any names, right? We're going to tell you who the good lenders are. We're just not going to tell you who the bad lenders are because we're nice. But before we get into all that, stats. What do we got on stats?
Well, let's see. I'm hopeful to have my April numbers
next
show, but let's go through our March numbers. And last time we did the metro area, but I'll just break it down for Hillsborough, Pinellas, and Pasco.
All right.
So closed sales for March year over year. In Hillsborough County, we were up 8.3%. Pinellas up 2.7%, and Pasco up 2.6%.
Okay. Hillsborough was the big winner.
Hillsborough was the big winner, yes. Hillsborough usually, we do pretty good in Hillsborough.
So that means 8.3% more homes sold in 2025 March than sold in 2024 March.
That's right.
Almost 10% more homes sold, so there's more activity.
More activity. So yes, we're definitely seeing that again with more inventory. So for inventory numbers, we are 33.3% higher than we were last year in Hillsborough.
Whoa.
Up 45.2% in Pinellas, and Pasco at 32.1%.
Wow. I mean, 30%. So that means that more people, 30% of more people have listed homes?
We're getting more and more listings. That number is still, if you do the month supply.
Right.
So for Hillsborough, that still comes out to 3.6, 4.5 months in Pinellas, and 3.7 in Pasco.
All right. So this is where you and I, we kind of break down the reality of that, right? You've always taught me that a healthy market is how many months of supply?
I mean, back in the day, they used to say 6, but I'm even waiting for it to get to 5 because I do think we need more inventory. If things change, the market reacts quickly.
Right. And what things could change?
Well, the interest rates, I think, we've all been waiting for them to, go down a significant amount. But even if it's not a significant amount, even a quarter of a point, we all see the activity all of a sudden pick up. Because there are still buyers on the sidelines. They're waiting for things to happen. I mean, things with the economy. People want to be just more certain, where things are. But any little shift, I mean, the market sees it right away.
Right. And speaking of, we'll go talk rates real quick because the Fed did not lower the rates last week. And I'll be honest, right? The Fed lowering the rates has really nothing to do with the 30-year fixed rate that Ksenia is referring to when we talk about mortgages. Most people, the vast majority, take out a 30-year fixed mortgage. The Fed rate is the equity line rate. It's the one connected to credit cards and credit lines and things like that. But when that goes down, it's kind of a bigger economic indicator, right? Like we're not worried about inflation. We can lower rates, which will pump more money into real estate. But what I want you to be scared about, I'm going to scare you right now, okay? What Ksenia is saying is if we don't have enough inventory and the rates drop, people are going to react quickly to the rate drop. And then what happens, Ksenia, if you only have, 3 months of inventory and you all of a sudden get twice the buyers that jump into the market, what's going to happen to those houses and the listings and whatnot?
I mean, there's probably going to be multiple offers on them.
Right.
There's multiple offers, only one buyer gets it. So, if you're not in the mix with the best offer to get it, there's a good likelihood you'll miss out.
So what normally happens to the price of the home when there's multiple offers? Like I've got my house listed, let's say for $500,000, and I don't really have any buyers.
I mean, if the competition, decreases, then that gives sellers, a way to, hey, I can get more money because I don't have the competition.
Right. So guys, listen to the math that we're kind of doing in a roundabout way. If you have less options and the house you want is there, and then the rate drops, and now it's the rate that you want, it's not just you. There's hundreds of people looking at these, and what she's talking about is highest and best offers. All of a sudden, any of the agent's going to say, well, we got 10 offers. Give us your highest and best offer, which means everybody's going to what? Raise it, right?
Yep.
And then it's very likely that house sells for more. Ksenia, what happens if a guy in a neighborhood sells his house for more than the next neighbor? What's the next listing do?
Well, they're going to want to get more than the neighbor that sold.
Right? That's what's going to happen. So we just taught you the reality of math, right? When rates go down, we'll talk about this more in the next segment. We have to take a quick break. But when we'll talk about what are the rates, what's going to happen in the future. Ksenia has a crystal ball. She brought it from Moscow, and we're gonna rub it and see if anything gives us any advice on real estate. You got to stay tuned to the Business Happy Hour with Ksenia from Mahara and Associates, and yours truly, Frank the Bank Cotto, on Instagram. Find me over there, like and share. Find the Business Happy Hour. I'll be back in just a minute with more radio talk on mortgage rates. Boom. James is on it today. He's like, 30 seconds. We're getting out of here today. All right, you high school kids. What are we doing in there? All right, who got a PH? That's what we want to know. Who got a PH? I saw a lot of long hair. I'm sending a message right now over to Greenfield. Let me text him right now. There is a table of long-haired hippies at the lunchroom right now. Chances are you can give them a PH.
What is a PH?
What is a PH? Boys, why don't you tell Ksenia what is a PH if you're listening, instead of spamming Mr. Cruz Jones? Scientific brain over here. Acidity.
I'm guessing that's not what you're talking about.
No. It is a penance hall.
All the best mortgage or real estate advice from Tampa Bay's top experts. It's the Business Happy Hour with Frank the Bank Cotto and Ksenia.
All right, welcome back to the Business Happy Hour, your number one show for all things business and entrepreneurial. Before the break, Ksenia from Mahara and Associates was bringing some stats. I know she has some more stats we're going to talk about. Today is an all real estate show. It's all real estate, mortgage, rates, market, everything you need to know about what's going on going into the summer. Because I don't know if you've walked outside, but it is hotter than Hades out there. Do you have any of that shiny black plastic on your car near your door handles?
Yes.
Does it get hot?
You know what? I've had the solar cover for my windshield for a while. I finally decided to put it up because, man, it has been getting hot getting on my car.
It makes a difference. It really does. Putting those things up, I used to make fun of people, but you got to get the one that has like a bikini on it or something like that. But no, I'm telling you, this whatever the heck Tesla makes their door handles out of, it's this black, shiny, I don't know, metal, plastic, whatever it is. Dude, it is so hot. It will burn your freaking finger when you touch it. And it pisses me off because I go get in my car and I'm like, ow. And then I get in a hot car. Really, there's actually a cool setting. Got to give a shout out to Cruz Jones 19. Cruz Jones over here on the Instagram. He wanted a shout out. He said PHs are amazing. He said that's when he gets his best homework done, during detention. That's right. No, don't get detention. That's bad. Get back on real estate. Don't forget to go tell your parents, Mr. Cruz. Tell your parents they need a mortgage, and Ksenia will find them a house. That's what we're going to do. Tell them tonight. Tell them to call Frank the Bank. Go to contactfrankthebank.com. That's what we do. So back to this. So we just explained to everybody what happened. So if there's less inventory, which is, where we are now, we're at 50% of what the quote unquote normal market is, and then these rates drop. Like, guys, let me explain to you. If the Fed had dropped rates last week, they kept them the same. But had they dropped them, even though it has nothing to do with the 30-year fixed mortgage rate, people would have been rushing out to buy houses because they would say, well, rates are down. But the truth is, yesterday rates actually went up a lot.
Even before the Fed meeting. So, I think the general consensus, we hear about this, Fed meeting, but yes, like they don't have the direct effect on mortgage interest rates. But didn't lenders drop rates a little bit before that meeting in anticipation of a potential decrease?
They absolutely did. And a lot of us thought it was going to go down. We thought it was going to be maybe 1/8 of a point. They're going to drop them. All I can say is it's going to happen. It's not a matter of if, it's a matter of when. And the question is, are you as a buyer prepared? I know Ksenia is going to say the same thing as me. This is the time to buy. There is less inventory. There is not as much competition. There's not as many buyers out there who are willing to pay the shorter rate for a short period of time, right? So you got to get out there now and buy. You got to marry the house and date the rate. Marry the house and date the freaking rate. What does that mean? You can refinance the rate. But if you go to buy with Ksenia in 6 months when the rates go down, and then the house is $20,000 more, you can't get that money back.
That's right. No, but speaking of inventory, we have so much more inventory than we did a couple of years ago. So for buyers, it's nicer to be on the market when there are options.
There are. I see them popping up all the time now.
Go look at the options,
Yes.
Go online, call you, get your pre-approval, and just start exploring it.
Yeah. Now, listen, you can talk to Ksenia first. You can go to 813-755-REAL. You can call her right now, 755-REAL. You can text her. Not you boys. You can text her and you can say, hey, let's go look at some homes. Get excited. Let her show you what's out there. Maybe that's the problem. Maybe you don't realize that there's stuff out there for you. Maybe you need to have her set you up on what do you guys call it? A search, like a drip campaign, right?
Sure. Yeah. We set up a search. You get automatic, emails, and you know what? Just start browsing those.
Right.
At least then you can get a feel for the market. Okay, I kind of like this. It's in my price range that I think, I could qualify for. But the bigger point is, if you decide to do this when everything else aligns, you could find yourself in a pickle again.
Right. A pickle.
That's
right.
Because then, if you're against the multiple offers, no buyers like to deal with those.
No.
It is not fun to be in bidding war with other buyers, for the one listing that, everybody loves.
You know what always bothered me about those, and maybe you can set the record straight, is there's probably some, not you, but there's probably some dishonest agents out there. And there's probably some people who are like, yeah, we got like 6 offers, give me a higher one. And the thing is, like, you get emotionally attached. And you're like, Dad, this is the house I want. All of a sudden, your kids are like, that's my bedroom, Daddy. Oh. My daughter pulled that on me. She wants us to move to this other house. I'm like, no. But they don't understand finances and what makes sense and what doesn't. But people get emotionally attached, and then you're going to be in this situation where you got to make your family happy. I'm telling you, do it now, like she said, before there's competition. Let's talk real quick. We'll stay on the rates for a second. We'll talk HELOC versus regular rates. So I just told you a second ago, the Fed didn't lower the rates. Had they lowered the rates, let's say they dropped them by a quarter. The current Fed rate right now is at 7.5%. So that means if you have an equity line in your house or you want one, your starting rate, your base rate is usually going to be no less than 7.5%. However, if the Fed had dropped the rates by 0.25% and you have an equity line right now in your house, your rate went down by 0.25% automatically. So your payment goes down. So that's a good thing, right? Let's say you want an equity line on your house. And people say to me all the time, why should I take an equity line instead of a refinance? Do you know why? Would you know what the difference is in a regular refi and an equity line?
No, that's why you're here. Tell me.
I love it. Guys, by the way, we don't rehearse this. So the difference in an equity line and a regular refi is, on a regular refi, you have to pay off your existing first mortgage. So it's lumped into one mortgage. So you're getting rid of 2 and you're going to 1, or you're just taking cash out on 1. But here's the problem. A lot of you have rates in the 4s and the 3s, right? And you don't want to get rid of that. And I don't blame you. So how do you get to the money to consolidate debt? How do you get to the money to buy something else, to do an investment, to buy another house? We can talk about that too, buying before you sell. How do you do it? you take an equity line, which is nothing but a second mortgage. It does not affect your first mortgage interest rate. And you can get rates in the high 7s, low 8s on an interest-only payment, which means your payment's way lower. Matter of fact, I'll run a payment for you real quick. We got 60 seconds. I'm going to help you guys out and tell you what does that really mean. Let's say you borrow $100,000 on an equity line, and let's say you get 8% for your interest rate. Your minimum payment on that interest only is going to be $666 per month. I'll make it $665 for you. Don't worry. But we'll do $665 a month. That's going to be your payment on $100,000. That's not bad, right? What can you do with $100,000 if it only costs you $666? Go buy a Ferrari. Really, truly, we don't care what you do. You can take the money and buy another house with Ksenia. You could buy an investment. You could buy a Ferrari, probably a used one, or put a nice down payment down on a new one. But there's a lot of things you can do with that. You can consolidate debt. Let's say you got credit card debt that's costing you $1,500 a month. You could pay it off, $100,000 of it, and it only costs you $665 a month. So food for thought. We'll be back in the business happy hour in just a minute. We're going to talk tariffs and good lenders versus bad lenders. Stay tuned. All right. Wow, we're killing it.
Okay.
What do we want to go into in this next one? Should we just go right in? Let's go right into good versus bad lenders.
Okay.
Want to do that? We'll tell a story and then we'll take that somewhere.
Sure.
That's good. I'm going to take a quick bathroom break because last time the maid was there. Every time. So, excuse me.
So I will just sit here and wait for Frank to get back. Oh, okay. Put me on the spot, James. But yes, one of these days we'll get you out of here early. You're like, believe it when I see it. See, Frank's good at, the awkward silences. He's always got something to talk about, whether it's just himself and his Instagram live feed. It's been good, yes. Much better week than last week because, I know you heard about my little one fracturing his wrist, so that wasn't too fun. It was our first big accident with him, and, he's back to normal now. The poor Jesuit kids are like, oh, Frank's gone. Oh, there he is. That was quick. Good job, Frank.
Okay. Yep. Frank was fast.
He's firing in 10 seconds.
Haha. He was going to make you do it all on your own.
He was.
Truth. All right, guys. We're about back. Here we go.
Welcome to the Business Happy Hour radio show with your host, Frank the Bank Cotto, the owner of Lincoln Lending Group right here in Tampa Bay for 23 years. Joined by his incredible co-host, Ksenia, realtor with Mahara and Associates, Tampa's top real estate company. Together, they have helped finance and close nearly $1 billion of real estate every year. If you're looking for local mortgage or real estate advice, the Business Happy Hour team has been right here on News Radio WFLA for over a decade. Listen right here or find us on the Business Happy Hour YouTube channel or follow us on Instagram at Frank the Bank Cotto. Now sit back, relax, and get ready for some serious mortgage, real estate, and business talk with two of Tampa's top experts. Here's Frank the Bank and Ksenia.
All right, Tampa Bay, welcome back to the Business Happy Hour. It's pretty rare that Ksenia and I get to just do a real estate show together, so we thought we'll just tell some stories. We'll talk about the rate. So hopefully you're well educated now on equity lines versus refinances. Remember, on an equity line, you do not mess with your first mortgage. So that is the key to the equity line, where Ryan and I are starting to do some commercials on that. You got to go to contactfrankthebank.com. That's the fastest way to reach out to me, contactfrankthebank.com. All my social media, by the way, has my direct cell phone on it. Everybody calls me crazy for that. I literally got called out again, like, I can't believe you put your cell phone. I'm like, I can't believe I want people to call my cell phone. All right. So anyway, 813-765-1239, guys. 813-765-1239. Little shout out to Thomas Gamber, skipping class. I know what you're doing. Anyway, Ksenia.
Well, you know what? On the HELOCs. Hold on. I just want to make sure because
Yeah.
I've got you right here. I don't have to call the number. I just want to make sure. So you could use the money to buy, say, an investment property?
Absolutely.
Okay.
You can not only, okay, so let's just make it clear, because that is, I know consumers ask these questions. HELOC, it is your money. It is your equity. It is tax-free. It goes in your bank account, and we don't care what you do with it.
Okay.
It's yours.
Don't buy the Ferrari. Get the investment property.
Ooh, good. Get the investment property to then buy the Ferrari with the money you
There you
make
go.
from the look at us. It's like we're giving investment advice. You can buy a new primary residence with it. So let's say this is a great conversation. Before we go into the good, bad lender story, here's a real good one for you. So let's pretend like you've got a seller, right? And you're selling his house. And let's just say for easy math, he owes $200,000 on his house and you're selling it for $500,000. So you have $300,000 of equity in that house. Well, your seller, most sellers, by the way, are buyers, right? Because they're going to sell in to buy something else. Your seller is going to buy this $600,000 house. And he would love to use the money from the sale of his house to buy the other one so he doesn't have to mortgage as much, right? But he hasn't sold it yet. But this house came on the market and he really wants it, and his daughter wants that bedroom. What does he do? Well, there's a couple things you can do. One, you can take out a home equity line of credit, just like Ksenia said, to use to buy that home. But if you do that, there's a hurdle. We have to count that mortgage payment against you. If it's $100,000, we already figured out $665 a month. That has to go in your debt ratio. You have to qualify with that. It prevents people sometimes. Another problem is when you're buying before you sell. Remember, you still owe $200,000 on that mortgage. You got a mortgage payment, probably a couple thousand a month on that. So now we're talking $2,600 a month. We got to count in your debts. So it becomes hard. A, you don't have the access to the money right away unless you do the equity line. B, you have it in your debt ratio, so you might not qualify. In comes Lincoln Lending Group's Buy Before You Sell program. Have we ever talked about this before?
You know what? Yes. I'm glad you bring that up, though. Yeah, tell me.
Okay. All right. As long as she likes it. So Buy Before You Sell is very simple. We solve both of those problems. I'm going to tell you in less than 60 seconds. We solve both of those problems in one shot. We are going to give you the money up to 80%. 75 is safe. We'll say we're going to give you 75% of the value of your house to use to buy another house. So let's say 75% of of 400,000, we'll make it easy, is $300,000, and you owe 200. Guess what? You have access to $100,000. We're going to give you the money on an interest-free, payment-free loan, interest-free, payment-free, no closing cost, and we're not going to count a payment against you on that equity line because there's no payment due. Here's where it gets even better. We're not going to count your old house payment against you in your debt ratio either. So we just solved all the problems. We gave you the money to buy the new house that Ksenia found you before you sold. We don't count it in your debt ratio, so you qualify. We don't count the old house payment in your debt ratio, so you qualify. What's the catch? Our partner company is going to ask for 2.25% fee on the sale of that house eventually, and they're going to give you 6 months to sell it. I think you can sell the house in 6 months, Ksenia. What do you think?
I definitely think so.
Right.
And I mean, that sounds like a pretty good deal to me. So that would be the way to go versus the HELOC.
Right. Now, can you do the HELOC? Yes. Is there a benefit to it? Maybe a little bit, because you're not paying the 2.25% fee, but you're making a payment on it and you're paying closing cost on it. And by the way, you can't get an equity line on a listed house. A lot of people don't know this. So if you already listed your house with Ksenia, you can't go take an equity line on it because no lender wants to give you a mortgage that they know is going to get paid off as soon as you sell your house, right? They're not in the business of handing you money to go buy another house. They want to make interest on the money. So
say I do want to just, use it to consolidate some debt or maybe some remodeling project, new kitchen, whatever. Yeah. How does the process work? I know with refis, you got to do the appraisal and the formal closing. What's it like with HELOCs? Same type of deal?
Very similar.
Okay.
Very similar as any other mortgage. We do have what's called digital equity lines, where you literally link your bank account, link your IRS account, things like that, and it's all quickly digitally verified, and we can close those in 5 days. So they can be easier. There's still closing costs. It's still a mortgage. There's still a transaction. You're still signing paperwork. It can be a little easier, but you still should expect to go through a similar process.
Okay.
Right. But the key is, consolidating debt, you just got to make sure it's worth it. And I think it's really worth it, to be honest. I mean, if you look at your debt and let's say you're really over leveraged and you have $100,000 in debt, what do you think $100,000 in debt costs somebody? It's got to be at least a few thousand a month, right?
Yeah.
I mean, I don't like credit card debt, but I'm sure it's that much. Well, I just told you can make that $100,000 down to $665. Like, what would that do for you? Right? Maybe you want to stay in your house. Maybe you want to remodel, take $50,000 and pay off your debt, pay the other 50 and remodel your house. That's a way to go. Anyway, point being is this is a very personal situation. It has to do with your personal finances and your personal equity. So go to contactfrankthebank.com, reach out to me or text me directly to find out how this would affect you personally. And then we'll put you in touch with Ksenia so she can find the house. And if you already are listed, don't forget you can access that equity on an interest-free, payment-free loan to buy that other house whenever you want with no obligation. All right. Now, I get to ask you some questions.
All right.
I know I talk so much. Here we go. Good versus bad lender. You came in here all hot and you're like, man, there's a situation going on. And
there's a situation and it's not resolved yet, Frank. So hopefully it'll end up as a good story. But if not, definitely the red flags. But I mean, already for me, and I think most agents know, it is so important the buyers work with a great lender.
Right.
What's important to me in a great lender, for one, communication.
Okay.
So this is kind of my big fault with this current lender that we're having. They're missing deadlines, can't get a hold of them. I've got sellers packed up, ready to go, and we just don't know. Is this going to close? Is this not going to close? And I mean, it's not a situation you want to be in. Buyer doesn't want to be in that situation either. They've got a place to move into. They got to be moved out of their place, and it's just a big limbo.
So I want to ask you a question here is, if you say, there's a big difference in lenders, and one of the big things for you is communication. What would you consider perfect communication from a lender? How often do you need to hear from the lender? Once you're in contract, the buyer's in underwriting. Tell me in your own words, what do you want to hear or see from that lender and how often?
I mean, ideally, say our, typical contracts are, 30 to 45 days contract to close.
Right.
I would like for you guys to reach out at least on a weekly basis. Just say, hey, this is where we're at. This is where we're waiting on. Things are good. Just that reassurance, it goes a long way.
Right. Right.
As a listing agent, I want to be able to tell my seller, hey, everything is good. You can relax because, we've all had those deals that, maybe fall apart right at the end, sellers all boxed up and, on their way to the new place and things don't happen. It's good to have the reassurance.
Right. And then there's a surprise, and then it becomes what we call a fire, right? And everybody starts freaking out. So what if the lender what if they don't have an update? What if nothing's changed in that week? What's your feeling? Still get a call?
Still get a call.
Okay.
Let me know, hey, we're still waiting on this. I mean, it just helps everybody feel better.
Right. And let's talk about relationships. How important is it for you to feel comfortable and to have a relationship with the person on the buyer side, with the broker?
I mean, it's important, but I mean, obviously there's so many real estate agents, different brokerages.
Right.
It's nice to work with an agent on the other side that also knows how to, monitor the deal. That's our biggest job. It's not just getting the house sold. It's monitoring the whole process.
Right.
Monitoring the deadlines, making sure that, hey, if we're up on a deadline and it's not being met, you got to negotiate the extension ahead of time.
Got it.
Lots of things happening. Any
other advice for originators who are out there, who are listening to a highly reputable real estate agent telling you about communication? What else could they be doing?
I mean, that's the biggest part of it.
A weekly update.
A weekly update, because right now I will tell you that on any other listing that I have, if I've got the same pre-approval letter from this lender, I'm going to think twice, and I will highly encourage that person, hey, first they're going to have to get pre-approved with my preferred lender.
Right.
At least then we know if there's that backup plan, because right now it's too late for us to change, although that may have to happen because my people are ready to sell.
And so that's a whole thing. Like you say, preferred lender, and a lot of times I think consumers, when they hear that, they think, oh, she's getting a kickback from this guy, or that's her buddy from high school, or something like this. By the way, Ksenia and I do no kickbacks or anything together. I ask her to come on here to be my co-host to provide value to you guys. So because we're both in real estate, it only makes sense. So we're not trading money or anything. But I think it's super important for you to have a relationship with someone you can trust. Because Ksenia knows that if there's something, she knows we're going to communicate, right? But she also knows if something's wrong, she can trust me to be honest with her and tell her, or my team to tell her. And I think that's where, if you don't have the relationship, these guys can kind of hide behind anonymity, or whatever is that word?
Anonymity.
Anonymity. They can hide behind being anonymous and you don't know who you are. And that, that's why I was kind of pushing
It's
the relationship.
definitely a trust thing. I mean,
Yeah.
I guess there are consumers that think, oh, there's something in it for her. No. What's in it for me is that I can feel confident that you guys will get it closed. If there are issues, they're going to get resolved. I mean, and worst case scenario, at least I'll be able to reach you. Maybe there is some big fire, but I need to be able to hear it from you.
And on that note, you're going to reach us in 1 second after we take a break. We'll be back on the Business Happy Hour with more great real estate advice. I had to give it to her, James. I had to give her the last 10 seconds. Can you hear him when he says it or no?
No. Well, for some reason, he's quiet today.
Oh, okay.
Oh.
Okay. Can you do it? Oh, yeah, you're right. You're right. Whatever. No, it's no big deal. I knew she was going to hit the end of a thought right there. I was like, I wasn't going to cut you off. So.
No, but on that note, it's like no news. You would assume is bad news. You know what I mean?
So I recorded you for a reason. I don't know if you knew I was recording you, but I recorded you because I've just had a conference with some of the people on my team because somebody, not my team, but a member of the company was slightly off on what I would consider communication. And there was a comment made about, oh, well, there wasn't an update to give, right? And without even asking you, you said exactly what I said to him, which was, it doesn't matter. It's just about having the communication and saying that you're there. Hey, listen, there's nothing wrong. But by the way, there's nothing wrong. Everything's fine.
Exactly.
Just
because when I don't hear from you, I'm thinking, okay, something's going on. They don't want to tell us.
Yeah.
If it's just no update, hey, that's not the bad news. If it's something like, oh man, this isn't going to go through, and they're just trying to maybe salvage it behind the scenes without letting us know.
Right.
I mean, that's where your mind jumps to.
And the truth is, you can be helpful if you know.
Absolutely.
It's when we don't let them know. So the proactive part is super, super important. We'll bring back into your story.
Let's get back to the Business Happy Hour radio show with your host, Frank the Bank Cotto, owner of Lincoln Lending Group, and his co-host, Ksenia, realtor with Mahara and Associates.
All right, back to the Business Happy Hour, number one show for all things business and entrepreneurial. And today, Ksenia and I are talking real estate. It's rare that we just have the show all by ourselves. We've touched on equity lines. We've talked about Fed rates. We've talked a little bit about good versus bad lenders. I was kind of pressing Ksenia about communication because I think that that's really important. And it seems to me that that's what you were saying, Sen, is like it's it's communication. And that's what the problem is with the existing lender. Are you kind of like left in the dark a little bit?
Yes, me and the buyer's agent.
You and the buyer's agent.
And that's definitely not good.
So
at least if they're not
agent.
communicating with me, talk to your buyer's agent.
Right. But so it's even scarier if you call the buyer's agent and you're like, hey, have you heard anything? They're like, no. Oh, that's a problem. So here's the thing. At this point, you don't even know if there is a problem, right?
I mean, hopefully not. I'm hopeful that it'll close. But worst case scenario, I guess, if we have to, salvage the deal and go to another lender, how does it work with FHA appraisals? I know they stick around, on the property, but does that mean that if, say, they needed to switch lenders, would you be able to use that, or would the home have to be reappraised?
Absolutely, positively, yes, you can use it.
Okay.
And I'll take it a step further. An appraisal on an FHA or VA loan must be transferred. If the matter of fact, to the point where if the other lender is slow, if your client requests, because it's your client that has to request, they have to email the lender in writing and say, I want my appraisal transferred to this company, and then they give the information, and then we coordinate with the other company to do the official transfer in the portal. If they say it and they don't transfer that in like 24 to 48 hours, they can get in a lot of trouble. Right. And then we can threaten and say, listen, we're going to notify FHA or VA. Those are forced to be transferred because they follow the home for 3 to 6 months, depending on the program, right? Conventional, non-QM, everything else, they can all be transferred. If a lender says they can't transfer an appraisal, they are lying to you. And they're trying to hold up a deal. So, the reason you ask that is because that's probably the main thing that would delay switching from one lender to the other. So legally, you can't close a loan from the initial disclosures until the 7th day, right? That just has to be our new federal laws, right? So if that loan got transferred to Lincoln Lending Group, let's say on Friday, and let's say tomorrow, and we disclose tomorrow, we'd have the appraisal transferred by Friday or Monday. We could close by next Friday.
Okay.
So it's that quick. Now, obviously, your client has to give us all their documents and everything, and I'm sure the other lenders, if they're not communicating now, they're not going to be quick on handing the documents over. But we can do it, and we've done that before. And I'm not saying a lot of times that's not the best option. So, I would always talk to the client and, help them figure it out, tell them what to say to the other lender, give them some tips, and then, if they get to a point where, the agents decide it's time to jump, then that's what we do.
Okay.
Right,
well,
so.
good to know. So that makes me feel better just in case. Yeah. But we wish us luck.
Yeah, I wish you luck. And I hope it closes. If not, Frank the Bank's going to get that one closed. But it's very important to have relationships. And the same thing with us is as bankers, we get the chance to refer out to real estate agents. And trust me, there is a short list of real estate agents. And it's the same thing, Sen, is we want people who communicate. And I want people who are an advocate for us. I want them to say, listen, you said it earlier, trust. Trust my partner. Trust this person. It works so much better when we're in communication with each other and when we can be honest with each other and nothing's hidden. So, anything else we should touch on good versus bad right now?
No, I think that was my big,
That's your big rah.
That's my big raw for this week, yes.
So next week, Ksenia is going to be running the show by herself, most likely. She might have a guest or a co-host in here. We don't know yet. But I'm going to be on a cruise ship with the family over there on that Utopia.
I was wondering. Okay, so that's the plan.
Little summer, start of the summer vacay with another family. It's going to be a lot of fun. Now, I will tell you, give advice to you guys. Cruises for kids over 12 is a really good vacation. Because you don't see them for like 4 days. No, we make them go to dinner. But they have kids clubs. They got their sail and sign pass. They can get food. They can get drink. They're non-alcoholic. They can get whatever they want. And they just love it because they get this freedom that they don't get normally. Like I go to a foreign country, I'm not letting my kid run around, right? But no, cruises are great. If you've never been on one, I highly recommend.
That's me.
Oh my gosh, that's right.
I know. I've never been on one, and I want to go so bad.
What is
Maybe
going
this will be the
on?
summer. I know.
Golly.
But you always talk about, and Ray goes on a lot of cruises
Yeah, he
too.
does.
They've got one coming up, and you guys are a fun family.
Yes, we try to be, right? You hear that, kids? We're fun. Oh my gosh, she called me cool dad earlier. I mean, I don't know if you guys can comment on this. I don't think sometimes my kids think I'm cool dad. I think they think I'm embarrassing dad. I don't know. What do you boys? Are you guys there?
It's a fine line there.
It's a fine line. Embarrassing dad or cool dad? That's the question. We're going to have to ask you kids later. Oh my gosh, I'm going to miss you guys. You guys are going to have to wake up and from your daily slumber in the summer and get on the business happy hour. I just thought about it. They're not going to be watching on Instagram all these high schoolers who love our show somehow. I must be cool, Dad. Anyway, so we've got a couple minutes left. We talked about buy before you sell. I know I always say I'm going to talk about reverse mortgages. Is there anything else you want to hit before I talk about something else?
No, that's okay. Yeah, let's talk about reverse mortgages.
All right. So reverse mortgages. Actually, I'll start with this before I do it. I'll do 30 seconds on this. Rates. Where are the rates going to go? Everybody's talking. I just had a chance to fly up to Michigan. We watched Bill Belichick. Pretty boring, I got to say, for a speaker. Sorry, Bill. And Barry Habib. Barry Habib is one of the smartest guys in mortgages for the last 30 years. He absolutely believes in what our government is doing right now. He is not a political guy, but he believes we're making the right moves. And he has met with the Fed chairman. He's met with a lot of the economists here in the country, and he said they are all on the same page about rates going down and allowing the real estate market to help spur the economy. They're just a little scared of inflation right now, and I think they're getting out of that. So with that said, he predicts that the rates will likely be 1% lower. Some say the fourth quarter. He says sooner. He thinks third quarter. He claims that everything is already kind of baked in. Like you made a comment how they lowered the rates before the Fed meeting. That's called baking in. It's like when a company says like Tesla is going to release earnings, right? And the stock goes crazy the couple days before. That's because they're anticipating the news. There's no such things in secrets anymore in this world, okay? So that's what it means when they say baked in. So if you're on the fence, Ksenia and I definitely encourage you get off now because when rates drop, prices are going up. So get into that. And then we'll talk reverse mortgages for 30 seconds. Hey, if you're over 62, do a reverse mortgage. No, in all seriousness, if you are in foreclosure, you got bad credit, but you have equity in your home, remember, it's your equity, tax-free. Go to reverseguru.com. That's reverseguru.com. Check us out. I have all kinds of videos that will teach you everything you need to know about reverse mortgages. That's reverseguru.com. Over 62, doesn't matter if you are in foreclosure, if you have bad credit, if you want to access your equity, pay off your mortgage, have no payment for the rest of your life, and never lose your home. Reverseguru.com. I'll personally take care of you. Ksenia, it's been a great show.
It's been awesome, and I love that prediction. So fingers crossed.
That's right. Prediction is the house prices are going up when the rates go down. What are you going to do? That's it. Have a great show, everybody. Next week, watch out for Ksenia. I don't know who her co-host is. Take good care of her, guys. Be nice to her, and it'll be a great show. We'll see you next week.
Thanks, guys. Bye.
All right. Instagrammers, thank you for watching us. We're going to shut it down.